Hey, welcome everybody to the 40 Finance channel live stream here on November 19th. You saw the title of this one, Stock Market Circus, because frankly, I'm losing track of even what's happening here across the board. My portfolio has taken a monster hit, and I'm working on a detailed video about that I'm going to put out over the weekend. But just across the board, the type of stocks that are going down versus the type of stocks that are going up is pretty darn crazy. So I'm sort of, I guess I would say, disappointed in the way that my portfolio has been trending. But on the same token, it does feel like a little bit of fun right now, in the sense that if you've been waiting for certain stocks to come down, the price is coming to a point that maybe you're like, maybe I should buy this. So even though I'm literally treading water in my account, I still feel like that this is a good opportunity to buy certain names. And so I thought I'd hop on today, see what you guys are up to, and just take a look at this big circus that we're in right now. All right. Let me bring up some stuff. First, Derek Ridland, good to see you. Kevin Hawthorne, as always, good to see you. Appreciate you guys coming out. And see what's on the big board today for our headlines. I'll go to CNBC just for fun, because they usually embellish things better. And not a lot that I'm seeing on their front page. Thanksgiving travel surge. Here we go. So we got some COVID cases coming out. And if you're not familiar, Germany and Austria, I think, are thinking about knocking or putting up barriers in place, or lockdown, I guess you would say. So that has hit the travel agencies and travel stocks very hard. We also obviously have our inflation. We've also passed bills here recently in America that, despite inflation, continue to spend more. So I'm not sure where all these chips fell this week, that stuff's getting so blasted. But in my portfolio anyway, that's exactly what's happening. The interesting part about this, though, let me bring this up real quick. If you go and look at, let's say, the QQQ, top 100 Nasdaq stocks, past 5 days, huge run up, right? Let me try to bring this out a little bit better. Huge run up from 395. You had a little bit of dip in the early part of the week, and then it's just been up across the board. Meanwhile, and I hope this fits on my screen, in a world like mine, and I'm sure other people's as well, take this off. Let's put one of my stocks here that's getting crushed, PayPal. It'll be the blue line. And let's get it off the 5-year view for a second. Let's go one year view. And here's your QQQ across the top in the candles. Here is PayPal falling like a knife. And how about we also look at Visa? These are my top 2 holdings. Purple. Boom. Minus 13% in, let's see, that's only 1 day. Let's get to 1 week. Minus 12% for Visa this week. Minus 25% for PayPal this week. So I am getting crushed in that regard, because those are my 2 top holdings. And honestly, on the PayPal side, I don't even get it. I really don't understand it, and I'm okay with that. This is not a company that is going bankrupt. This is not a company that came out and said, we give up, and some other company can have all of our money. That's not the case here. But right off the bat, from a 1-year perspective, right now, on November 16th, 2020, the price was 192. Today, we're at 194. If we, 5 years is a little far. I'd like to get an 18 2-year view would be good. Let me take this PayPal off. If I can, there's Visa. Get some of these out of here. Well, okay. So last year, in March of 2020, $93. Moving it up to August of 2020, you were at 191. A little bit of a dip into last November too. Okay, and then you had a run up into February, and then February came down, blah, blah, blah. The point of that is PayPal has had its fluctuations, but it's never really fluctuated this far down. So it's a very interesting event, at least for this particular stock. And for me, anyway, I'm taking advantage of it. I'm going to try to reach my goal of 100 PayPal shares is basically how I'm looking at this. And just hang tight. I never really intended to sell this stock anytime soon, but I'm just shocked going forward on where this sits today. And somehow, that's what the markets come down to. On the flip side, if we have, and you guys know where we're going here, if we have trailing 12 months revenue of $25 billion, all right? So let's keep that in mind. And then we want to go to a stock that's been doing much better, although it is down today, Affirm. And let's just see what Affirm does for fun. Remember, PayPal trailing 12 months, $25 billion. I'm on the wrong page. There we go. Affirm, less than $1 billion. Okay? Revenue per share is about the same. It's not an apples to apples comparison. I've already done this for you. But the fact that these two are trading so differently, it looks like Affirm has melted down more than I thought this week, is just unbelievable. And you're seeing this stuff across the board. So Upstart was another one that was up very high, and now it's sinking down. It was in the 350s, which was outrageous. It's sinking down. Visa's the same way. Meanwhile, you have Shopify, which to its credit has done very, very well with its earnings. But this one over the past 5 days is up astronomically. And some people I see online are touting the Shopify Pay or Shop Pay as something that's going to basically bankrupt PayPal and Visa, which I have no idea where that news comes from or who thought that is true, but it's not. I wouldn't even put that in the sphere of concerns for PayPal because they only really focus on the top 100 internet properties. I was looking for Bitcoin today, but I didn't. There it is. So Bitcoin down ever so slightly today at 57,000. So those are some initial thoughts about what's going on. Meanwhile, I look on the other side, and I'm going to do questions here in a second. I look around at things like Alibaba, which, I don't typically hold Chinese stocks. I've said that numerous times. But now you're starting to get to this point where it's like, geez, $8.41 EPS, P ratio trailing under 20. I'd have to go through their investor report, but I'm starting to get intrigued by this at this price. This is a company, let's see how much money they do in the last 12 months, 769 billion. So this company does, granted it's just revenue to revenue. I can barely do that math. What's 769 divided by 25? I have to break it out. That's how much more revenue they do over PayPal. 1 second here. 30x PayPal's revenue. And you've got a forward PE of 1812. It is starting to get to that point where even I have to consider Alibaba just from where they are. So, you got that, and there's other ones just like it. On the flip side of it all, Tesla, which has, certainly proven me wrong time and time again, but it continues to go up with an EPS of $3.06. And then, of course, the joke across the internet is Rivian at 131, minus $16 per share. So that one's on fire. Funny enough, look at this. Let's see if I can squeeze this in. Look at this. Morningstar rating on Rivian, 3 stars at 117, economic mode narrow. I don't know if that's an error or not. I have no idea. Lucid, it was just on Jim Cramer's show. I saw a little clip about that. To the moon since October 18th, basically doubling. It's losing $12 a share. Morningstar, though, does give it 51.16. I'm actually shocked by that, to be honest with you. But I don't know what I'm thinking about the EV race anymore. I really don't. So that's not a place that I am very well versed in terms of manufacturing and the type of goals that are involved with that. So I'm not sure that I'll jump into any of those. But I guess the question here, and I'm getting ready to go into the chat, is just, what do you guys think? How are you doing? If you hold Tesla and NVDA and Shopify, if those are the 3 stocks that you owned, which is a ton of people from just the start of the pandemic, right? When those stocks kind of went a little bit more viral, you probably have no idea what I'm talking about when I say stock market circus. However, if you own almost anything else besides those, maybe some of the EV stocks that are out there, then you're probably feeling the same pain as me. Where do you go from here? So let me say hi to some people. I'm going to get a drink real quick. Jordan, how you doing? Good to see you. Derek's been a Baba fan. He's about to move all his chips to Alibaba. I'm actually starting to think about it, to be honest with you. And that's crazy for me. But that company, I don't know. It's just at a point where it's been beaten down so hard that it's hard to not see the upside, to be honest with you. PayPal following what Visa is doing, probably to some extent, although I will say that Visa is going to get hit even harder with this pandemic lockdowns if those happen. So the international travel thing is so big. MasterCard just came out with a report about a week ago that said international travel, they were starting to see the return of cross-border transactions, roughly 60-70% to pre-pandemic levels. So that was a boom to Visa. Then Visa and Amazon started fighting this week about credit cards in the UK. And, everybody overreacts to that. We'll see what happens, but I would say people at Visa and people at Amazon are business folks, okay? So where the internet is loud and yelling and rattling cages, those two are just positioning themselves for the best deal. My guess is both have a lot to lose if one leaves the other, and they'll come to some type of agreement. We'll have to see. That is different than how I see the Roku-Google relationship, where I think Google actually has a little bit of an upper hand. As a person who has several Roku TVs, but not the Roku stock, I certainly hope that they get it together. But I don't know. It just depends on how greedy Google gets, in my opinion. All right. Fatima, any thoughts on Activision? I've been watching Activision because obviously ATVI, they're getting crushed. The thing that I guess I don't like in the short term is not necessarily this price. I would be interested in investing in a video game company, but this is a problem that they will not fire this guy, or he will not step down. So I would really like to see that come around, because now, all the headlines that I've been reading is, they have petitions inside of the office to get rid of this guy. You have a couple board members who still support him. The Xbox boss at Microsoft says to get rid of him. PlayStation's getting complaints. This guy has to go. I don't know. I know what the accusations are. I don't know too much about his history, but it'd be very hard to feel good about Activision until this is gone. And the other reason why I think that's important is because nobody's going to get shit done at the office, the Activision office, until this is settled. And they build like the new frontier, right? Like, hey, it's simple team building. We had a tough stretch. We did some things wrong. Our leader wasn't great. Then you kind of get rid of him, and you build up a new leadership staff, and they have to come in and say, listen, now it's our turn. We're going to build this the right way. People get behind them. Good things start to happen in the office. Activision needs to make that change, in my opinion, before you can invest in it. Otherwise, it's just too much of a distraction. I will say, though, on the flip side of Activision, the way these video game stocks are going right now, Take-Two is one that might be worth watching if we see some more market dip. There was an opportunity here at 147 that I was considering, but they're getting some lower price targets is the only problem. So make sure you read everything before you jump in, but Take-Two is a possibility. There's a side of me with video game stocks, by the way, that I have to wonder on the big ones, whether it's EA, Take-Two, there's probably stuff I'm forgetting like Nintendo, whatnot. Just the way the digital world is kind of progressing, depending on what you believe in, Web 3.0, NFTs, metaverse, blah, 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 blah. Depending on what part of that you believe in, you'd have to imagine that some of these video game companies would have added value in the transition of the internet over time. So when I see some of these communities, people are talking about Roblox and Facebook as the obvious winners to whatever the metaverse becomes. I say probably right, except what does Take-Two? You think Take-Two and EA Sports are just going to sit around and say, no, we're not participating? That's not going to happen. So I don't know. If you want to go long-term, one of those companies might be worth it. All right, Krishna V, I think this is one of those chances to buy the dip and wait 5 to 10 years. Same case with me, losing money on PayPal, Visa, Baba. And I do agree with that. I think with Visa and PayPal, I have to study Alibaba more if I get into it. But Visa and PayPal, this could be a 6-month problem. If you're going to talk about travel with Visa, and if you're going to talk about concerns with PayPal's growth, which I don't actually really see that too much, but if you are going to focus on those issues, you could have another 6 bad months of flatness or perhaps worse. In both cases, I see some lights at the end of the tunnel. For Visa, I see an eventual return to travel. cross-border transactions, which of course is the most important. I see a return of business travel, and I have friends and family that travel for business often. They're right back in the game. Like, they're flying, they're doing all the stuff. Now, granted, they only travel really to United States places, so I feel good that that's coming back. The reason that's important to Visa is because when you travel as a business person, you never, like, you pay it on the corporate card, right? So let's pretend I worked at Take-Two. Since we were looking at them, I have to go from Cincinnati, Ohio, where I live, to Los Angeles. I usually have that corporate card, and I buy my flight. I eat lunches and dinners and whatnot, hotel, and I pay it all on that card. That's all transaction. Now, that's good news for Visa and every other credit card holder that's doing per transaction. Now you throw in that scenario and say I had to go to London for business travel, and you get cross-border on all of it. So there's a lot of reason to think that Visa has a great runway, and I, for one, was very impressed with how the results were during the pandemic. So as much as travel and whatnot got sucked the life out of their growth prospects, they still comped pretty well. So when I say it's a matter of time, I mean it's a matter of time. It's an eventuality, but it could take longer than I thought, obviously. All right. Derek's in on V and PayPal, added Activision. I think all news is short-sighted, so that's good. So maybe since Derek bought Visa and PayPal, I'll just have to buy Alibaba now, because we keep missing each other on the stuff that he buys and stuff that I'm interested in. Grace Lim, you should sell PayPal ASAP and buy NVDA or Tesla. I think, my 2 cents is you're selling low and buying at all-time highs. That's just not something fundamentally I would do, but hey, everybody's got their own way, and my way certainly isn't working at the moment. Jordan, looking at Zim, we will bring that one up. Just announced an amazing dividend. Let me see what Zim is, Jordan. Zim integrated shopping. It's your 1-year chart. P ratio of 3, EPS of 17. The Morningstar, they're saying 47.75 narrow moat, which, the narrow moat is very good. I'm just reading about it here. Let me squeeze it in. Provides container shipping and related services in Israel and international. Company provides seaborne transportation. Okay, so container shipping. Now with these, and you're probably in a very good time frame for container shipping, given the logistics challenges. So normally, I'm surprised that they don't have a dividend. Normally, container stocks pay outstanding dividends, and it's almost like a profit share. It's a stock, but it's like a profit share to some degree. All of these got tanked during the pandemic. Let's get a 5-year. This one just came out in February of 21. Okay, so this is new. Let's see if we got Star Bulk Carriers, maybe. I want to show you what it looks like on a longer frame. So Star Bulk had a high of 11 before the pandemic. They dropped down to 5, and now they're rising. So I'm guessing that shipping rates are at a premium right now because of supply versus demand. So it does seem like a good time for shipping services, Jordan. Just know that it is a cyclical, as you probably already know, that kind of pool can dry out quickly. I'm guessing though, as far as drying out quickly, the stuff that I hear about shipping and port, transitions, that this boom time could last for a while. I would certainly think through summer of next year at the bare minimum. All right, Grace says it's better to take a loss and make more profit. That was in tune to her sell PayPal and buy NVDA or Tesla. PayPal has no vision or growth. Well, I do appreciate your opinion. I wholly disagree. And I guess to share everybody else, Venmo, not as sexy as Cash App, right? Is what most people would say. But I think Venmo has the integration opportunities that Cash App will never have. And we're starting to see that. We're starting to see Venmo launching into Amazon. And we're starting to see Venmo, I believe, launching into Walmart. And we're starting to see the sketches of the super app that they've been talking about at PayPal for about a year now. Starting to see those sketches come out. So, everybody has their own opinion, and I'm not mad at Grace at all. I've heard that before, that PayPal's a dinosaur and they don't think outside the box. I disagree, and I think the part that gets underrepresented in PayPal's game plan is their control, and control is the wrong word. How about permeation with the top 500 e-commerce retailers? Okay, whatever a firm's headlines are, PayPal's already been there and done that. Now, a firm did get the buy now, pay later at Amazon, and then PayPal got the Venmo. So there's a little cat and mouse there. A firm will maintain 100% of BNPL, I think, for a contracted period of 1 to 2 years. And so good for them. That's a great win. Now, I will say that BNPL is absolutely positively ripe for government regulation. And I will also say that the concept of buy now, pay later is coming. It's launching at a fantastic time where debt levels are low, cash levels are high. That's not typically the way America runs. All right, so I would not be surprised if in a year's time, maybe 2, when the world of shopping and credit usage continues, that BNPL finds itself in a different situation in terms of credit score worthiness of who they can apply their metrics to. So we'll see. Maybe I'm wrong, and that's okay. And Grace, I respect your opinion too. All right, Dan. Circus or Casino? Yeah, hey Dan, I recognize your name. I don't think I've seen you for a while. Good to see you. Monster hit on Wish, or Which, my fault. And Dan's big on DraftKings. I'm keeping my DraftKings. I'm keeping it. I just did a video on it. I think I was tried to be so very forward with the fact that DraftKings does not match any fundamental valuation that I've ever portrayed on this channel. It's a revenue game and it's a market share game, and it could end into, a Zeppelin type event. But with the price that it's at now and the price that I'm at, 34, from a person who uses their app and a person who is in that industry, as someone who likes to play games like that, I can tell you that DraftKings is well positioned, and I couldn't agree more with the moves they're making right now. Yes, I wish that they weren't burning so much daggone money. However, that was the thesis going in. So anyone who bought DraftKings and was disappointed about their business, after they bought it, did not read the business before they got in, because this business was designed to set money on fire for the next 2 to 3 years. And, you know, I recommend you get a piece of one of those online gambling plays here in the United States. Pick the one that's best for you. There's plenty of them like Penn Gaming and I believe MGM that are going to be much closer to the fundamental level that we often talk about on this channel, but get a piece of something, okay? I chose DraftKings. I encourage you to choose something. Fatima DraftKings is killing me, and I don't understand why. Fatima, we're in a weird spot heading into winter. The hoopla of football is over. However, where I think people are going to be wrong, let's bring this up. DraftKings hit their numbers. They were a little short, I believe, on the revenue. And by a little short, I mean 5-10%. Okay? Now, this is important. And I went over this in my video on DraftKings. The 2 or 3 states went live last quarter that were not supposed to go live until this quarter. One of them was Arizona, that I know off the top of my head. I believe, I'm not even going to try to speculate on the other ones, but go look at it. Long story short, whenever a market opens, DraftKings plows user offers, marketing spend into that market to sign up as many people as possible. Because of that, each time a market opens, it's a pretty big event on the balance sheet. So their miss from a revenue perspective and a cost perspective was because it was a lot of that spend was pulled up, kind of changed the anticipated playbook for Q3. And I think that you'll inherit some of those wins into Q4. The other thing that we saw in Q3 from a year-over-year perspective, they did comp well, but last year at this time, NBA and NHL were operating. The leagues were going, I guess, in Q3 because the season was so discombobulated because of COVID. Now we're back to normal. So I encourage you, if you're in at a reasonable price at DraftKings, to stick with it till next football season if you can. I mean, if you're bleeding money, get out. Nobody deserves that. You can see on the Morningstar for DraftKings, and this stock is not designed for Morningstar. I'll tell you that. But you got a 3-star rating, fair value of 42.72, economic mode of narrow. Not bad for a little bit of a money-burning startup. And then you got Penn. I wonder what Penn, yeah, see, Penn has more fundamentals. Fair value of 67. So just grab one of them. Do your research, grab one. I'm sorry, I'm not even showing the stupid screen. Let me go back here. Here's your DraftKings Morningstar real quick. Right there, fair value, mode of narrow. Penn, $52, under fair value, economic mode of none. So, like I said, try to pick through one of these names, whatever one you feel good about. I don't know what LVS's online sportsbook plans are, but they got blasted because their Macau got blasted on regulation. It could be one if you want to play a fundamental game. I'm just not interested in figuring out what the Chinese government is going to do to Macau and wake up and worry about that every day. That was kind of my problem with Baba, but now Baba's like basically buy one, get one free, so the rules have changed. All right, echoes from above, PayPal getting killed because of all the new competition. Square has been getting hit as well, buying opportunity. This is echoes from above. FinTech overall, a bit of a bubble. It'll do great long term. That's a good way to look at it. A FinTech bubble I could totally see. Competition is, I think competition is is more there. I think that it's 1,000 cuts competition more than it is a major player competition. And the thing about finance and transactions, guys, is the whales will make the difference. Okay, and what I mean by whales, let's think about big banks and little banks. Who holds the most deposits, etc. PNC versus your town savings and loan. All right, it's not even close. They can't even maneuver against each other. And that's the same thing that happens in the payment world. So I talked about PayPal for a second, representing themselves in the top 500 e-commerce companies on the internet. They're landing whale accounts, man. Like Amazon, great. Getting a Venmo thing there, that's awesome. Getting it at Walmart, super duper. But that's not it. Like, that's not the showcase, right? The showcase is 90% of the top 100 whale accounts. They've got them. That's where stuff starts to add up to $25 billion. Okay, and I have a feeling that world's only getting started, right? That the winners in the whale pool are only going to digest more and more revenue. So echoes from above, I appreciate your comment, and I will say that I think it's a buying opportunity too, but I'm really skeptical, of the next 30, 60, 90 days. Fatima Activision, I understand, but hopefully it will rise next. Get rid of that CEO. And I don't know the guy. For all I know, he's the greatest guy ever. Got to move on from the rumors, man. You just got to move on. If you remember about Zillow, when I bought in, and there was a headline about Zillow selling their houses to a lot of houses to some sort of investing thing, 2,000 houses just to get rid of them. Dude, I was all about that. Like, bury it. Bury the past, pennies on the dollar. Let's set up the new company. Let's move forward. Just get past it. That's what Activision has to do. Grace, PayPal's Bitcoin investment. That doesn't mean you own. You're right. So PayPal's Bitcoin, you don't hold the coin. You don't own the coin. It's a intermediary. So for the people who are keen on crypto and PayPal, I'm not sure that Venmo is the right investing platform for you because you don't have ownership. However, just like you see Bitcoin ETFs, there's a lot of people, especially those over the age of 25, who are like, maybe I don't want to own it. Maybe I'll let PayPal screw around with all that, and I can have, a stake in it, and I can use it to buy things all buried within PayPal. So there's probably more than one way to play it, to be honest with you. Plug power and EVs, I've lost so much track. I saw big news today. This is Eric Lee. I saw all the news this week, I should say, just how much run-up we saw this week. Plug Power, a stock like it, makes sense to me from, this isn't going to blend in here very well. The picks and shovels kind of play. And it was 66, and now it's 45. I don't imagine any of these will be profitable for a while. Could hit $1 billion of sales next year. I don't know. I'd have to stack them all up. You need a screener to stack all the charging stations up, and I haven't done that. And just see who's offering, Blink, Plug Power, whoever else is doing it. I couldn't tell you. There's probably a game to it, and just, not all charger companies are going to win, right? Not all EV companies are going to win. Some of them are going to come out and the hopes will be high and they'll eventually fade away. I don't know if we've had a car company fade away in a while. I'm trying to think. But, you know, I can think of several, such as like Saturn, used to be a car, and I know this is an EV, I'm telling you about car companies here. Saturn was a car company that eventually, you know, they sold a ton of cars in America, and then they fizzled out of nowhere. There's probably a decent chunk of others that I'm forgetting about, but Saturn comes to mind as what is probably going to happen in some EV companies. Everything looks good, sell a ton of cars, things get crunched after, you know, the first 5 or 10 years, and then they go out of business. I think there's a stat. It's a very interesting one. Let me see if I can look it up. There's a surprising percentage of S&P 500 companies that have went bankrupt. 1 second. All right, let me put this on. Here's the search I did. Now this is over time. This isn't today. Why can't I move this? Let me fix this for you guys, sorry. You can't read it. There we go. All right. I don't know what macro axis is. Based on the latest financial disclosure, S&P 500 has a probability. I'm not going to, I think that's auto-generated. 80% of companies, share value. Well, this is a 2016 article, but let's see if he's got what I'm looking for. Let's see what this one says. I don't know why this can't freaking be clicked on. Well, let's see if this one loads. 24 companies that prove you can lose 90% of your money on stocks. You know, maybe Smile Direct's in here somewhere. Bankruptcy filing. This isn't, I don't think that this is S&P 500, so that's not going to help us any. Let's see what Inc. says. Heavyweights used to spend 33 years on the S&P. That's forecasted to drop 14 years. Now, this is 2016, this article. In 1965, the average tenure of companies, we just read that. By 1990, it was 20 years. It's forecast to shrink. So right in 2016, the average company spends 14 years in the S&P 500. About 50% of the S&P 500 will be replaced over the next 10 years. That is crazy, and that's just a forecast. So I was down that rabbit hole of EV stocks, Rivian, whatever, and it doesn't mean you can't make money off of them. But when you read folks on the internet or wherever say like, you know, this is the next whatever, everything's the next Apple and Amazon, right? The truth is the churn for the big dogs in the S&P 500, the churn is gigantic. You know, projection of 50% of the S&P 500 will be replaced over the next 10 years. And I've got to wonder if that didn't accelerate with the pandemic and thinking about restaurants and stuff, but just know that S&P 500, making it into it, hell, that's the last of your concerns. Can you survive 15 years? It sounds like that's the harder chore. Let's see. Which is my best price to reload Visa? So at this point, I mean, why wouldn't you start looking under 200? Hell, it could be there right now. It holds this 200. It's pretty funny. Let me show you something. So we're at 207. It's like it wants to do it while I'm on the screen. Let's just take the last 6 months. You got your death cross. Down to 209. Support of 199. I mean, I honestly will probably add 5 shares today at some point if I get off here in time, 325. I will also likely add PayPal is now down to 193. I will definitely buy 5 shares of that. And anything under 200 I think is a fair price for the long term. This isn't a company that's losing money. Next year, EPS target of 843. So you're in the 20s on forward PE. And you've got double-digit revenue growth projections for next year. And if international travel comes back, I mean, it's just going to go. That's just what's going to happen. So, you know, keep that in mind. PayPal, I didn't look at next year's. So next year's projections, I mean, I can see like right now they're projected as mildly flat, maybe up 10. That's more than 10%. It's probably like 15% on EPS. And then again, double-digit revenue returns. So I feel good about that. Let me hit another couple questions. Mr. Mughal, gambling is bad. DraftKings, yeah, I know. You're not wrong. You have to be able to balance yourself, absolutely, for sure. It's funny that I do, the irony in myself is I do stuff like that on DraftKings, and then I come here and I won't spend an extra nickel on something. So I need to align my brain a little bit better, absolutely, for sure. Is it foolish to buy PayPal at the current price? I certainly don't think so, but, you know, come to your own conviction on it. Online gambling is too narrow. Anyone can start a car company. Anyone can get a .com. How many car companies from the 50s are still around? So, Derek, I think you're saying what I got into with the Saturn cars. You probably remember those. Joe Schmo on Discovery. I've looked at it before, not for a while. I think that they have a play, a solid play for, you know, connected TV and all that. Looks like a flat line right now. Just eyeballing it. Morningstar is 42 on it. Let's see if I can get this thing out. Here's 1 year. I mean, obviously this was a run-up, some false idolization of some kind, and now you're sort of back, if not negative. Next year, if they hit 320, gosh, you'd be forward PE under 10. Revenue, though, starts to fall single digits. That's a little scary. Single-digit revenue growth is a little scary, in my opinion. But stack it up against these guys. Viacom, Liberty, you know, Discovery and Netflix or Disney or whatever one you like, and stack them up on a stock screener and go through each thing and see what you got. I mean, it certainly doesn't look overvalued by traditional metrics, but it does. If they don't do something better than 5% here, it's not going to move much. All right. Derek talking Gateway Computers. I do remember those. They had a cow pattern on the box. Gateway also reminds me of the mortgage company, Countrywide, for some reason. Countrywide Mortgage, everywhere. I mean, these guys had storefronts everywhere. I cannot believe. Well, I can believe that place went out of business. but they were huge, and they got wiped off the face of the earth. So let me pick off something. PayPal, Visa, MasterCard, Affirm. I would pick 2 of those 4. And I don't think you need them all. I think you pick 2 of the 4 that you like best. I will say that most people who were probably focused on growth only would probably lean to MasterCard and Affirm. So I own PayPal and Visa. It's very unlikely I'll own Affirm at all because PayPal has buy now, pay later. I anticipate the success of Affirm will further boost PayPal's buy now, pay later implementation going forward. We'll have to see, but I'll leave it at that. All right, guys, I got to roll. I'm going to try to make some moves here. I will be buying probably 5 shares of Visa and 5 shares of PayPal here before the market closes. I have a full portfolio update video that I'm working on. That'll go live Saturday or Sunday, so you can see the carnage in detail. It's like watching a horrible accident happening on the freeway. So anyway, and then next week, at this pace right now, next week I will share with you what I'm doing on a small basis with crypto currencies. So look forward to that. Hope everybody has a good weekend, and we will see you on the next one. Bye.